Hello everyone, my name is Sanjana Deshpande and welcome to the New Year's episode of Market Perspective podcast by Emkay Wealth Management. Today we have Ashish Ranawade, Head of Products with us. Hello Ashish sir.
Hello.
To begin, can you give us your outlook on the global economic perspective?
So we are expecting 2025 calendar year to be flat in terms of global growth. There is going to be a little bit of challenge as far as India is concerned. We're not going to see the kind of growth we saw in the past. So this could be a year where you could see a little bit of dip in terms of our GDP growth. But having said that, there are various pockets within the global economy and even within India where there are opportunities which, if investors invest well, they should be able to capture, growth.
The US economy has been resilient and seen a bounce back. Do you think this trend will continue?
So, US to a large extent now depends on what the new president is going to do. And, he's always been pro-growth, pro-America. His slogan is Make America Great Again. So, there is bound to be a huge amount of impetus that the US government is going to throw behind, the US economy. And I would, probably bet on good amount of growth coming out of the US.
Indian mutual funds have seen a great run with the markets. How do you see the run going in 2025?
I think that trend should continue. Investors are willing to put more and more money into the markets through mutual funds, and I think here the campaign of mutual fund Sahi Hai has played out very, very well. And especially for the salaried class, where every month they have a certain amount of surplus which they can invest in the markets through mutual funds. The SIP provides an excellent way of investing that surplus every month. So I think I would tend to believe that the mutual fund growth will continue going forward as well.
Okay. A lot has been said about the FIIs exiting India. Do you think our markets will be able to back up through DIIs buying?
So FIIs buying or selling to a large extent depends on two factors. One is the relative valuations between India and the rest of the world. And the second is liquidity. And liquidity to a large extent also depends on factors like interest rate, on factors like the currency movement, etc. We have seen a significant and sudden depreciation in the Indian rupee, and that, and plus the recent interest rate reductions in the US, probably and couple that with the high valuations of Indian equities, have kind of put the FIIs on the back burner for the time being. But I'm sure they will come back when they start seeing growth and when they start seeing the relative valuations become better again. So I'm not so worried about the FII pulling money out of India.
Okay. In your byte to cafe mutual fund, you had stated the current market offers opportunities for stock selection as pockets of attractive valuation exist. We may not see a broad-based rally across the board, but there are ample opportunities for growth and wealth creation within Indian equities. This is what you have said. So, what other opportunities do you advise investors to seek instead?
So at MK Wealth, we always curate products which we believe present those opportunities for our investors. So while everybody agrees at this point in time that the broader markets are expensive, there are pockets and which are not very expensive, number one, and number two, there are products or there are fund managers who have the ability to capture these pockets. So
Yeah.
there are some value funds in India,
Yeah.
and I don't want to name any of them, but there are value funds which have an average P of their portfolio which is much lower than the benchmark P.
Yeah.
So that offers a good opportunity for investors. The second opportunity is infrastructure. I believe the government is going to continue to spend a huge amount of money on creation of roads or ports or airports or electricity transmission, railways, and as the GDP grows, the ability of the government to spend more and more on this particular segment increases, and all the companies which are involved in these businesses, I think they are captured very well through some of the infrastructure funds. So that's another pocket of you can say a segment where investors can look at, and we've curated some of the infrastructure funds which we are offering to our investors. On the whole, again, PSUs as a basket looks relatively less valued than some of the other private sector. So whether it's banks or whether it's some of the oil marketing companies, or there are a lot of companies there which are unique in terms of defense, railways, etc. I think that basket again offered through some funds is a very good area to invest in 2025. Interest rates are headed down, so I would expect at least a 50 to 75 basis points cut in interest rates in calendar year 25. So you can play duration. So there are gilt funds which are positioned to provide you a high duration. So that could be another area. Of course, it's not equities, but it's again an important asset class which investors can look at, because interest rate cuts don't happen every year, right? It's like a once in a 3 or 4 year phenomenon. So that's happening this year, likely to happen. So investors should look at that.
Okay. Now there is one myth buster. A lot of HNIs buy diamonds and keep investing in precious stones. What do you think of that as an investment strategy?
Well, so we are not competent to answer questions on diamonds, precious stones, or art, or bitcoins, because this is not an area of interest, or this is not an area of expertise for Emkay Wealth. But we do talk to a lot of people from these who are experts in this space, and especially since your question is related to diamonds, the price of diamonds has been falling significantly in the last 1 or 2 years, largely because of a new phenomenon called lab-grown diamonds, and the younger generation is preferring to use lab-grown diamonds because they are exactly the same to the naked eye as compared to the real diamonds. So from a consumption perspective, I mean, diamonds are here to stay. They are a girl's best friend. So Gen Z is going to use a lot of diamonds. But I wouldn't recommend them from an investment perspective, because there's no fundamental value as such to diamonds as compared to, let's say, gold. Because central banks use gold as reserve. Diamonds are only used by HNIs or individuals. So from that perspective, there's a huge demand coming in for gold, and year on year gold has delivered steady returns, better returns as compared to even fixed income instruments. So from that perspective, I would say gold is a much better bet than diamonds.
Okay. So indeed, this is a very fruitful discussion, and thank you so much, Ashish sir, for your insightful investment ideas, thoughts and views on the markets. If you like this video, please do like, share, subscribe, and if you have any questions, we will get back to you. You can write those questions in the comments. Until then, it's best of growth. Thank you.